Consumer spending decline in January 2025 and January 2025. U.S. consumer spending experienced a notable decline, with personal consumption expenditures decreasing by 0.2%. This decrease was primarily attributed to several factors. 1. Unseasonably cold weather. The unusually cold weather in January likely deterred consumers from engaging in outdoor activities and shopping, leading to a reduction in spending on non-essential goods and services. This weather pattern affected large parts of the country, including regions that are typically not prone to such temperatures, further exacerbating the impact on consumer behavior. 2. Economic uncertainty. Rising economic uncertainty, driven by factors such as potential tariff increases and federal worker layoffs, made consumers more cautious about their spending. The threat of tariffs on imports from major trading partners like China, Canada, and Mexico raised concerns about future price increases, prompting some consumers to cut back on discretionary spending. 3. Impact of tariffs. The announcement of tariffs by the Trump administration, including a doubling of tariffs on Chinese imports and the imposition of 25% import taxes on Canada and Mexico, created concerns about potential price hikes. This led consumers to be more cautious with their spending, especially on goods that could be affected by these tariffs. 4. Inflation concerns. Despite a slight decline in overall inflation to 2.5% in January compared to the previous year, consumers remained wary of potential price increases. The core inflation rate, which excludes volatile food and energy prices, remained at 2.6%, indicating that underlying price pressures were still present. This contributed to a more cautious spending approach among consumers. 5. Increase in personal income. While personal income increased by 0.9% in January, primarily due to a large annual cost of living adjustment for Social Security beneficiaries, this did not translate into higher consumer spending. The increase in income was likely offset by concerns about future economic conditions and the potential impact of tariffs and inflation. 6. Market expectations. Economists had forecast a 0.1% increase in consumer spending for January, but the actual decrease of 0.2% came as a surprise. This discrepancy suggests that consumer behavior was more sensitive to economic conditions and policy changes than anticipated, leading to a sharper decline in spending. 7. Regional disruptions. Winter storms and wildfires in various parts of the country disrupted economic activities, including home building and job growth. These disruptions likely contributed to a broader slowdown in consumer spending, as affected regions experienced reduced economic activity and consumer confidence. 8. Federal worker layoffs. The Trump administration's call for widespread layoffs of federal workers led to concerns about job security and future income. This uncertainty likely influenced consumer spending decisions, as individuals and families became more cautious about their financial outlook. 9. Changes in spending patterns. Consumers shifted their spending patterns, allocating a higher share of their budget to essential items such as groceries, auto payments, and utilities while reducing spending on discretionary goods and services. This shift reflects a more cautious approach to spending in the face of economic uncertainty. 10. Historical context. The 0.2% decrease in consumer spending in January 2025 marked the most significant decline since February 2021. This historical context highlights the severity of the current economic conditions and the impact they are having on consumer behavior. In summary, the decline in consumer spending in January 2025 was driven by a combination of factors, including unseasonably cold weather, economic uncertainty, the impact of tariffs, inflation concerns, and changes in consumer spending patterns. These factors collectively contributed to a more cautious approach to spending among U.S. consumers.